Well, good afternoon, everybody. Super excited for this week's episode as I'm joined by Aaron Halfacre. By the way, best name in real estate that I've come across. Let's start with that. Aaron, great to meet you. Thanks so much for joining me on the call here.
Oh, I'm so happy to be here. I really do appreciate it. I appreciate the chance to talk about industrial real estate.
I love it. It's basically all I think about. I am probably the world's biggest industrial real estate nerd. It preoccupies nearly every weekend of my day. So this is I'm right in my element, and I know you are too, because you're immersed heavy with the CEO of a private real estate investment trust that focuses just on manufacturing properties. I want to do like a deep dive into manufacturing because I don't think it gets nearly the coverage that other areas of industrial do. And you and I talked about this just briefly as well, is that Prologis is an example, 1.2 billion square feet. It's all warehousing and distribution space. Most publicly traded REITs are, anytime it's mentioned in the news, it seems to be e-commerce, warehousing. That manufacturing side of industrial, which is also really big, just doesn't get the same mention or exposure. So I'm super excited to have you on here to just talk about that. So perhaps just before we jump into it further, what got you into manufacturing? What was what was that kicked that off that decided that that's what you were going to focus on?
Yeah. So as you noted, so it's Modiv Industrial. We're publicly traded, but we weren't to Modiv Industrial when we first started out. When we first started out, I had merged two REITs together, and they were net lease diversified. So there was a third of industrial, there was retail and office, and never liked office. Started selling that right away, and then so I started to really explore opportunities because as a publicly traded company of my size, where there's a lot of upside and there's a good income, but we're smaller than the Prologis of the world. And if you're smaller, that means you have less bank financing, less capital. Therefore, your cost of capital could be higher, right? And we know like Prologis has very low cost of capital, and they can go buy 3.5 caps in the California gateway markets and not blink an eye, right? And so we're looking at opportunities, and to your point, everyone is in industrial. And when they say industrial, they typically mean warehouse or distribution, right? And the one thing that I had a rub with warehouse and distribution is that because everyone was in it, both investing in it, but also participating, is that there was really low barriers to entry. You could speculatively build, and we see it everywhere we go, concrete tilt-up warehouse space, and then they go try to find a tenant, right? And not all that is made the same. And I can remember doing real estate at BlackRock on the private side years ago. And, we had a warehouse and we got a tenant in there, and they were there for, they had a 10-year lease. And then what happened, this was out in sort of, middle of Pennsylvania, 2 or 3 exits down on the turnpike, someone bought some new farmland, got a tax incentive, built up a new warehouse, and that tenant just moved. And it didn't disrupt them at all because they're moving pallets and they're moving forklifts, and their racking system is being moved, and they're on the same interstate. And so I was like, what's a space in industrial where you can't speculatively build, that there are some natural barriers to entry? And if you drive around the heartland of America, you're going to find lots of manufacturing facilities, and some of them are small and indiscreet, and they're in the industrial parks, or they're off, they're not on the main street. And I just started looking at those opportunities, finding them very compelling, both from a yield perspective. But then as we thought about it more and we toured more assets, just fundamentally resonates. The fact that in our day and age, particularly in the last 30 years, where everything we do is on the screen and we're enamored with information and technology, and everything's going to get obsolete tomorrow, and there's going to be category killers. And right now it's AI, and before it was the demise of shopping for Amazon. But we get stuck in information. And we forget that we live in a very physical world, that we're sitting in chairs, we have desks, we have cars, we have things that, there's a lot of mechanics and infrastructure that needs to be in place for us to exist. And I think we forget about that sometimes. And that has to be made somewhere. And, manufacturing, and I'm sure we'll get into the story on manufacturing in the US, is a very interesting one. But that's what initially gravitated towards us. And then once we started getting in, it was obvious. We fell in love with the types of people who are at the operations. We fell in love with the types of opportunities that we were seeing in different communities. And these are not only do they make good, sound real estate decisions, but they're also economically very viable. So we like that.
there's also something to be said that a factory is going to have a lot more higher paying jobs than a warehouse where it's more minimum wage labor. And that's happened all over the Rust Belt, where there were all these factories that were paying really great wages. And then when everything started getting offshored to China, that meant that a lot of these factories closed, and that meant a lot of jobs went. And that, to your point, that like that's a huge economic driver for the community, for the state, for the country. There's a lot of benefit that comes from having a factory versus having a distribution center. And even with a distribution center, there's a trend towards these becoming just dark warehouses at some point in the near future, where these will just have a bare minimum amount of people working in there, and it'll be literally a dark warehouse in there. But compare that to a factory where it's higher paying jobs. There's so much to the economy. And I love the point that you made too about how they're sticky. If a tenant's going to move into a factory, they're probably going to have to make a lot of improvements. They're going to have to make a lot of customization. It's a lot harder to move from a custom built factory or one that's been heavily modified to another one, whereas going from one warehouse to another. And I think that that's indicative of how we've overbuilt in the last year warehouse space. And there's some markets that have vacancy rates in the teens right now just for that reason. But on the manufacturing side, there has been very little. And then so let's jump into that, because the history of this is really fascinating to me, because I see that the Industrial Revolution is continuing to revolve, and we went through that period of heavy manufacturing in the US and North America to being outsourced to China, to now there's being a resurgence back into North America with reshoring, onshoring. And I think that there's actually a big shortage of manufacturing facilities, and the plant space in North America is going to need to increase dramatically to handle all this. So when you look back, so let's say at the beginning of the Industrial Revolution, at least in North America, early 1800s, that all seemed to start on the East Coast. That's why the Rust Belt accelerated as quickly as it did. How do you view manufacturing space in the context of history?
Yeah, that's a great question, and I'm actually I love history about anything that anything that I focus on. I like to try to understand its origin, right? And if you think about manufacturing and what in the modern sense of manufacturing, we're not talking about yarn spinning in the United Kingdom back in the 1500s. We're talking about the manufacturing of typically hard goods, right? So metals and plastics and things like that really exist in our world today. And you're right, they really started. So if you think about the early forms, and you go post-colonial England, United States, and we're really starting to build our manufacturing capabilities, it all started with a sense of power. And so early forms of power were waterways. So you found a lot of things along the rivers, you found them along the ports, that you had access to water to either transport your heavy goods, or you had water wheel power to do it. So these are the earliest things. These started to populate. That coincided where the population was, which was in New England and progressively into the Midwest over, as we rolled into the 1800s and things like that. And so that's where the first manufacturing really began, right? There wasn't a ton of, I live in Reno, Nevada. There's a ton of manufacturing here now, but there wasn't 150 years ago, because there was no one here 150 years ago, and there was no waterways or real power or anything like that. And so that's where it started. And then, once you kind of communities start to form, and so let's say at one point in time in history, there was a factory that did textiles in the Northeast or in the Midwest, which was prevalent back before we got into sort of real modern manufacturing, and they did it on waterway. Well, that space might have gotten scraped, and they would have put in something else, but manufacturing tended to go back, and that was a couple of reasons. To your point, skilled labor was already there. Right. So they already had this history of having labor. They also had a history of having manufacturing there, so they accepted it. I think even though we do need manufacturing in the United States more than we have, we'll talk about what we buy relative to what could be out there in the future, but there is still NIMBYism, right? It's harder to find a manufacturing facility in the state of California, an example, because even though we tell people as a nation that we need manufacturing, and state politicians want this in their state. What do they want? They only want the clean tech stuff, or they only want the things that are not going to be too big. And so NIMBYism still exists. So that's why even the new manufacturing we're seeing still is in the Rust Belt, still in the Carolinas, Southeast area, just because that's historically where there's been, and they're open to it. And so I think that's a really interesting standpoint about the history of it. If you've ever read Alan Greenspan's The History of Capitalism, American Capitalism, he talks so much about the manufacturing capabilities in the United States. And really, if you can't really separate a strong economic environment without a manufacturing capability, right? Our rise to being a powerful nation was what the pinnacle was right after World War II, was the fact that we could mass manufacture goods. That we didn't necessarily make them better than they did in Germany, but we could make more of them. And we can make them faster. We can make them more reliable than what they could in the UK. And so we started to make engines, and we turned Ford factories into making Jeeps or tanks, and we had Kaiser ship factories going. And the fact that we could manufacture quite a bit was economic strength. And in this modern day and age, we're not at that kind of world war, and let's hope we never are. But there is certainly a military element, defense element to the having manufacturing capability. But it's also just because if you're a strong economic partner, at a trade partner, and you're sitting across the table from someone, if you know you can manufacture something and you're not dependent on this other nation for something that's super critical, and we'll talk about chips, I'm sure, at some point here, that creates a better negotiation ability. It makes you less reactive to bad situations, makes you more thoughtful about the future. And so I think manufacturing, not only is it a cool asset class, not only does it have a rich history, but it's so ingrained in a strong economic society that I don't think most of us even remember or realize.
That was poetic. I love it. I think that was so well said. So many strings I could pull on there, but let's start with the semi-chip one, because I think that is very relevant right now. TSCM in Taiwan, I believe them and Samsung make 90% of all higher quality semiconductors, and there's threats there right now with what happens with China and all sorts of things. And so there's the CHIPS Act in the US. Part of that is to actually encourage more high-tech manufacturing space. When you think of manufacturing, do you compartmentalize it that there's one area that's more that traditional manufacturing, like metals and plastics, versus one that's more high-tech manufacturing? Or do you lump it all together into manufacturing?
That's a good question. I do separate them on the margin, and I think that doesn't mean that I choose one or the other, but I do view them distinctly. And I think, and I'm all for the CHIPS Act, the Chips and Science Act, and elements of the Inflation Reduction Act that bring this technology, this high tech sort of chip manufacturing or certain clean tech technologies back to the United States. And the primary reason for that, though, is, and let's just be honest, we're vulnerable, right? Because 90% of that is made there. And look, I don't, if I go back in history, it got the news. It was a bigger topic in the United Kingdom than it was here. But when China, subsumed Hong Kong, we moved on. It didn't affect our daily lives, right? It was a financial center. We already had our own financial center. We had other access to financial centers. But Taiwan is different, right? Taiwan does manufacture quite a bit of these things. So this large sum of money produced by the government to entice people to come over here, and you're hearing, headlines about, oh, we're opening a new chip foundry in Albuquerque or Phoenix or something like that, but there's a lot of in that space. That's because we need to go back to that point about being a strong trading partner, to be a strong defensive thing. Yes, those chips were not there during COVID when we needed them, so we couldn't put them in our brand new cars. So all our new cars shot on the lot, so we didn't sell cars, and that was the headline. But the reality is those same types of chips go into your fighter jets. Those same types of jets go into, same types of chips go into, other types of defense-related contracting that we need. And so we're going to reshore that just out of the need to protect ourselves. And so that has a lot of energy and initiative behind it. There's certainly a lot of rhetoric around it, certainly a politicized rhetoric right now, given the time where we're at in the election cycle. I get it. Even if you set that aside, there is still going to be a growth in manufacturing, right? And there is a separation there. No, people, like, we're not buying an Intel chip plant, right? Because these are $1 billion types of operations. They're highly complex. It's really, it's a white lab space typically. There's not a whole lot of manufacturing equipment in there, but it's a very stylized process. But like any industry, and the nature of how manufacturing is we're not typically vertically integrated anymore. So we have lots of specialized vendors who do specialized things. And in any environment, typically, you're going to house something in a plastic or a metal, or you're going to need people who are going to need to be able to operate these materials in a way. And they might be small jobs in terms of they might be a small component of a bigger type of thing, assemblage. And so there's a whole cottage industry that serves the semiconductor, just like serves the automobile space or aerospace and defense. There's a lot of small manufacturers that have been around for 30, 40 years, still producing goods that will benefit even if they're not, next door to the $1 billion chip manufacturing plant. So I do differentiate them. I think for a public company like us, we will own increasingly larger assets as we get more and more scale, but we have to be managers of people's money. And so my job, as much as I love manufacturing, I want to buy and sell it, my job is to make my investors money. And that comes in two forms. One is buying assets that I think will appreciate over time, and two, throwing off a cash dividend, right? So Modiv stands for monthly dividends, and we throw off a cash dividend. Those are the critical components. So I have to make sure when I buy things that they're going to do that. And I think you can do that in both spaces, but there's certainly that sub-industry of a lot of the smaller, non-sexy types of manufacturing in the US that is essential and will also continue to grow.
Yeah, and that's the next logical step to jump into, because I love that point that you said. It is non-sexy. And it's funny how so much institutional money went from office and retail now into industrial. And that office tower, that is sexy, right? If you're buying a Class A office building, at least pre-2020, if you're buying that in a great market, that looks awesome. If you're buying the Empire State Building, I believe that's owned by the Empire State Trust in New York. But an example like that is that's a trophy asset. Whereas now everyone's looking at industrial and they're like, well, these are just kind of ugly concrete gray boxes. But some of these big distribution centers all of a sudden do look like that. They do look like they've got a Class A architectural style on the outside. And I think it has lended itself to the people that probably put too much ego onto the exterior, whereas this manufacturing subclass of industrial, it isn't sexy. Like, these can be old manufacturing properties that look old, but what happens inside of it is so instrumental to the whole economy and these companies, if you buy the right property, you can have a tenant that stays in there. They're sticky. They're not going to leave. So with the mantra of being monthly dividends, and you have a portfolio of property. I read the most recent quarterly report you guys put out. I believe it's $44 million in annual revenue. So you've got a big portfolio already. Two-part question. Let's ask this first. So your existing portfolio, do you expect to have that look the same going forward? So I guess I'm just trying to ask you to put on your crystal glasses to look into the future a bit here. Is it the same properties that you own now? Is that what you're going to continue trying to buy in the future?
Yeah, it's a good question. So if anyone has been like I talked to the story because I talked to a lot of Wall Street, but if you ever take an Amtrak from New York to Philly, or you've driven in certain parts of the Carolinas where there used to be factories, right? I bring this up because if you take the Amtrak, you'll see a bunch of old, dilapidated 1800 brick buildings that were factories, right? And people think of this. They think, oh, well, what? Or they think of steel mills that have shut down, or coal, these really dirty things that just shut down. And look, economic change happens. They call them the ruins in Greece and in Rome because they're no longer occupied, right? They might be architectural marvels there, but no one likes a vacant building. And so I bring that up because that is where you have to start with. In my world, you have to start with what is the worst possible case scenario. And the worst possible case scenario is that you have an empty building that no one wants. And over time, it becomes cheaper to not maintain it and just allow it to stand there, right? We don't have any of that. We don't ever want that. And that is an extreme situation of worst case scenario. But I say to myself, how do I prevent that from happening? How do I prevent this binary outcome that if I have a tenant who's in here and they're building things and then one day they decide they don't want to? Well, one thing that people think of, and this is going back to that reference of technologies, they're always worried about obsolescence. Oh, it's going to get obsolete. I'm sure if, RCA had a tube TV manufacturing facility, that's no longer there, right? Because we don't have TVs in the same way. They're all flat panels and they're all made overseas. And so people are always like, oh, can't have manufacturing because it's going to get obsolete. But that's where I was talking about that technology. They forget about we live in a physical world. And there's things that will still require someone to manufacture them. And so what we focus on First is in an industry, because everything is industrial, but what industries make sense? What industries are first sort of intuitive at a first person kind of thing? Give you an example. Last year I looked at, it was probably the Midwest. I want to say Oklahoma. Don't quote me on that. They were nice building, 5 years old, manufacturing facility that did luxury dog food, well, luxury pet food and vitamins. Very profitable company, new building. There was a lot of lease term on there. I tell myself, I don't know, and not that I don't love pets, I do, but I don't know in a world, there's like a real bad situation where we have a hard recession and there's no discretionary consumption going on, and that people don't have that marginal dollar. Will people still go and buy that luxury dog food, right? Because if I can't ascertain that the demand's going to be there 5, 10, 15, 20 years, then I might want to avoid that because it might have great fundamentals, but I have to think that down the road, this could eventually be an empty building. And if it's an empty building and it's got special machines in it, either I have to rip all those machines out and put someone else in there, or I have to find someone who specifically wants all those machines, right? And if that prior company didn't exist, then why would a new company want the same equipment? So that's how I first started about it. From there, I think, okay, I understand their industry. So give you an example of something we did buy. We own several assets from Valtier. Valtier is the leading manufacturer of sort of highway safety products. In particular, what we own are the galvanized guardrails. So there's two types of guardrails out there. You know, the guardrails are the metal curved things you see on the freeways everywhere you go. There's galvanized and ungalvanized. Certainly galvanized works really well if you have any rust, things like that, right? So the leading manufacturer. To make a galvanized guardrail requires you to have a rail spur, take a big rolled plates of steel, stamp it, punch it, dip it in zinc in open air environments, cure it, and then go ship it out. Right? So it's a very dirty kind of thing. To your point, these aren't manufacturing facilities, they're not architectural marvels. IMPay is not designing your manufacturing space. And typically a lot of times it can be very much corrugated, shed type material looking on the outside, and they build around what it is that they need to manufacture. So if I'm stamping metal and I have 100 tons press, it might be almost 2 stories tall, and it might, it'd be really, so I put that where I want it, and then I build around it, right? To your point, a lot of times we're looking for companies that have more capital improvement in their equipment than the building itself cost, because then it makes it extremely sticky. If they're in a good industry that I think long-term will be there, so guardrails have been around for 50 years. It doesn't matter if you have a Tesla or an F-250, if you hit a patch of ice or something goes wrong and you hit a guardrail, it's going to bend, it's going to require replacement, and 90% of that replacement dollars are the Federal Department of Transportation. So I've got a viable customer that is not discretionary, doesn't have a credit card balance to worry about, can buy these things. It's something I can't buy on the internet. But it's very viable. And so from there, we're looking to make sure that they have a lot, if not all of their concentration in the manufacturing facility we have. So I'll give you an example. When I inherited these portfolios, one of the things that we got rid of was all the retail assets. And one of the retail assets we had was a 24-hour fitness. And COVID hit, and 24-hour fitness filed bankruptcy, and this asset got rejected. And, we're seeing that right now in Rite Aid, and you see that in Big Lots, and there's a lot of things where Big Bad Bath & Beyond, where people will just reject their leases and they'll walk away. And maybe what they'll do is 5 years later, go build another one down the road. You don't want to ever have that happen in your manufacturing space. You don't want it to happen in your warehouse either, but it happens. But in your manufacturing space, you really don't want that to happen. So what we're looking for is survivorship bias. And what I mean by that is they've had a lot of Fed chairs. They've maybe gone through Volcker, they've gone through Greenspan, they've gone Bernanke, they're dealing with Powell. They've suffered the outsourcing when we were once a dominant manufacturer, and now we've underinvested over the last 30 years. They've survived all this stuff because they are viable in what they make. People need what they make, and they're good at it, and they maintain profitability. Those companies that have been 30, 40 years who just happen to own the real estate on their balance sheet, and now they're saying, okay, capital markets, I will do a sell leaseback to you, still be in the property, and I think that they can be there for 30 to 40 years. So to your question about what will we change when we buy, we'll continue to buy things that are survivorship bias, that they're going to make sure that I can underwrite intuitively that they're going to be there. They have a good market share of their business. Most of their business is made from this one golden goose, so they're not going to kill that if they ever get into a financial disruption. I'm looking for those. There are an abundance of those. It's amazing how many are out there because, to your point earlier, no one's buying them.
It's It's so interesting because I've said this on my channel probably more than anything else about investing, is that the first thing that you need to do is understand your downside risk. And I think that that's something pretty unique in industrial, especially in manufacturing. On the warehousing side, if a tenant leaves, if it's a cookie cutter warehouse, you're probably going to find another tenant. But on that manufacturing side, you mentioned that earlier. If they bought a bunch of machinery or the building was customized and it was specific to their use, it can require a considerable amount to refit that and find another tenant to it. And if people don't understand exactly what that risk is going into it, that can be the difference between a profitable investment and one that bankrupts an investor. So I love how you enunciated that so well, because I'm in complete agreement with that. I guess that leads to the question I had about how you assign weighting on an opportunity. So if a property comes across your desk, manufacturing property, and there's a tenant in there, how much do you assign to the building itself in terms of how you're underwriting this? So that could be, what is this property worth if it happened to go vacant? And then what's the weighting that you assign to the tenant and that survivorship bias that you mentioned? I'm assuming you're looking at both of those in tandem. So how do you measure what weighting you give to both of those?
Yeah, in real estate parlance, everyone's like, "Oh, what are your target markets and things like that?" And a lot of times it starts first on real estate, right? That's what the narrative is, particularly in industrial, because that matters, right? Are you going to have a warehouse in Tulsa, or are you going to have a warehouse outside of the LA ports? It really matters, right? Because it's going to affect your pricing. And people talk a little bit about pricing per foot. Manufacturing is a little different, right? To your point, what you could have two manufacturing facilities right next to each other, and they could be very vastly different square footages, and they could trade at very different rent per foot. And why is that? It's because of the tenancy. And so I think ultimately you have to, in this context, you are thinking of who's paying my rent, right? The viability of real estate is important. So you want to have residual value in your land. You want to have residual value in the case that you could, you got below market rents. And so ideally that if you had to replace it, you could live to fight another day. But ultimately it's the tenant and the tenant's financial wherewithal that enables you to pay, that for them to pay the rent, therefore you to collect the rent, therefore pay their dividends, right? And so in real estate, historically, real estate people are just eternal optimists, right? They're always seeing the potential of something. And my job is to make sure, what I said earlier, is to start with what could go wrong and work my way back from there. So tenancy is pretty important. We want as good as real estate as we can get, but then these are not the ego driving things you're going to put on the cover of a pitch book, right? They're not necessarily glamorous looking properties. You're not getting a whole lot of infrastructure in the property itself, right? It's really the equipment that they have inside of it. And so the viability is the tenancy. Now, a lot of times we end up getting lots of land in these, so they've been around for a long time, so they had large parcels of land. And interesting enough, most of them were never built in an industrial park, but now they are in an industrial park. And what I mean by that is 30 years ago, they bought land outside of town, bought a lot of it, put their facility up there, and now it's been infilled where now industrial has been built around it, warehouse or otherwise. And so they now are in industrial parks, which increases their land value. And ideally, you can always, some of these they're easy to scrape if you ever had to. So you think about that. So real estate is important. We'll look at the comps, we'll understand it, but it's hard to compare because I could have a manufacturing facility in Ohio and it would be very different than if I was in Mississippi, right? And I can't necessarily take the comps from the 3-state radius because they're going to be very different depending on what they manufacture. So we do that. But the most important thing is the business. And I tour every property that we ever look at. Our chief investment officer does too. We're a small team. We only have 11 of us, but 2 of us go and tour every property. And why I do that, if I were buying a Dollar General store, or a lot of some of these warehouses, I just look at CoStar, I look at the three ring demographics, figure it out, run some price comps. I got a pretty good sense. I don't need to see the box. I will go see the box necessarily, but I can see it before or after. Not the case in manufacturing. You have to go tour these assets beforehand. And not only do and these are all the remote. So I'm flying to remote places. I'm getting in rental cars. I'm going in, and you show up in an F-150. Do not show up in an imported luxury car, right? That's kind of who I am anyway. So it fits. And then when you do the tour, believe it or not, you don't always do a tour with a facilities manager because the facilities are what they are. These have been on their balance sheets for 34 years. They're maintaining them. They're not neglecting these things because that's the goose that lays their golden egg. They got to have it work. What you do want to tour with is the operations manager. You want to know that their job is to make sure this factory pumps. And so you will ask them questions about how their supply chain is. What are their raw goods? Where are they getting it from? How often do they get them? Do they have any backlogs on that front? Are they, and how long does this inventory that raw goods here last? And walk you through from typically raw good to a finished product. Walk me through how it's manufactured. You'll talk about how many shifts they have, how much of that is welding or machinists or technicians versus material handlers, the skilled labor. How, are they short labor? Are they having difficulties with that? Who are their competitors? What would their wish list be? You learn so much about the business and how sticky it is, that the tenant is ultimately the vast majority of what you're doing when you buy this manufacturing real estate.
We're going to need to have part two on this for sure, because I know I've got a ton of questions still, and I'm sure other people are thinking it as well. So offline, let's you and I tee up another time to jump on a call. In the interim, though, how can people get in touch with you if they want to reach out or follow along with you?
Yeah, Modiv, modiv.com, website there. You can look about the property. There's a link on there that has all, we're a public company, so everything we do, we publicly file, right? To your point earlier in the start of the call, my earnings release, I encourage you to go look at our fourth quarter earnings release or third quarter earnings release. What you're going to see is a refreshing way of approaching it, being very candid, being very transparent. We're not going to get it all right. We're not all Elon Musk of the world, and we have to block and tackle and fight every day to do what we can. We care deeply about what we're doing. That's the easiest way. You can go on your iPhone or your Android and you pull up your stock app, type in MDV, and get alerts. You'll always be abreast of what we're doing. And that's, and we're always reachable too. There's a management at Modiv.com. We do our best to answer every question we can. Small team, but we get to it. And, I love to be these opportunities to talk about it and tell people and answer questions. I could do this all day.
Me too. Yeah. Well, we will definitely do it again. And I would encourage everybody to read your most recent quarterly report. It was, like you said, refreshing. It was entertaining. I'll post a link to it too, because it's must read commentary. So Aaron, thanks so much. I loved everything about that. That was fantastic. I already look forward to part two.